Financial Survival Network, helping you to survive and thrive in the new economy. Get our complimentary newsletter at financialsurvivalnetwork.com. This is the Financial Survival Network.
Today's show is brought to you by PrepareWise. Rough weather's ahead, so it's time to prepare. Your leading source for emergency preparedness food. Go to preparewise.com and always use the code Lutz to get free shipping and a whole lot more. You are listening to the FinancialSurvivalNetwork.com. I'm Kerry Lutz on 1230 WBZT. When it comes to figuring out the true supply figures of gold, who's buying what, who doesn't have it and says they do, well, you know as well as I do, the only place to go to is Harvey Organ at harveyorgan.blogspot.com. Harvey, welcome back to the Financial Survival Network.
Well, thank you for having me. It's a pleasure being on your show.
Hey, so what's up here? We got some major supply shortages. Looks like they're forming, doesn't it?
Oh, what we're seeing today actually is the 31st consecutive trading day of negative GOFO rates. We are seeing the negative on the 1 month, negative on the 2 months, negative on the 3 months, and finally, for the second time, negative GOFO on the 6 months. So even today, the gold is in backwardation of 70 cents for the December versus now, versus the August gold. And that has never happened before. And gold is money. And gold should never, ever, ever be cheaper in the future than it is today. It's just impossible. And what it really means is there is a shortage of good delivery bars in London. These are 400-ounce bars, and they're having trouble locating bars. I guess it started with the drive-by shooting in April. There's two shootings, April 1st and 15th, and the Bank of England they lent to bullion banks 1,300 tons of gold. What they were totally caught off guard was the huge demand that it would create. This gold was just sought up by the Russians, the Chinese for sure, South Koreans. They bought up just about everything. And now that gold has moved from shore to shore. It's moved from on the Thames River right up to China's vaults and the Russian vaults, and it's disappeared. And plus huge demand from the public, and all this gold is now gone. Of course, there's trouble for the Bank of England or the LBMA both to try to find good delivery bars to lend into the market. That's how they've been doing all these shenanigans for the last 25 years, was lending gold into the market, and they never asked for that gold back, except two countries. One was Venezuela, and the other, of course, was Germany, who tried. And they now have to wait 7 years to get their gold back. That kind of shows you that really the Bank of England is void of gold. We're certainly seeing the problems over at the GLD, where gold is disappearing, and what is disappearing out of GLD is just entering into the Shanghai vaults over in China. They have settled just about everything over there, and they settle in lots of physical metal, whereas over in the Comex, it's all paper. And I myself am having a lot of trouble looking at JP Morgan's data, especially on their dealer side, as to gold coming out of theirs to settle on some of the longs that are standing for gold. So that's what I'm seeing out there. I'm seeing a massive problem. I'm seeing gold leaving vaults everywhere, all right, and moving from west to east, which is exactly what I told the commissioner when they asked me if I thought that the Comex could ever default. That was in 2010, and I basically said, yeah, I can see gold moving from west to east. They all looked at me as if I was a nuthead. But it seems to me that's what's going on right now.
Sure looks that way. And then we're seeing interest rates, the 10-year, going up at a pretty rapid clip, which also bodes pretty ill for the economy and for the banks as well.
Yes, actually, these are the two critical points where everybody should watch. It's the 10-year Treasury rate. That is major for Main Street because, of course, it's housing and your businesses, it's inputs for basic projects. So as interest rates rise, that kind of kills that. It kills Main Street. That's half the equation, but the other half is even more deadly. And that is the derivatives, what we call interest rate swaps, which are gigantic. The total world is 1.4 quadrillion. That's everything, of which the major part, I think it's 65%, is interest rate swaps. Of course, your major players are the five guys, J.P. Morgan, Wells Fargo, Bank of America, Goldman Sachs, and of course, Deutsche Bank is pretty big on that derivative front in Germany. And they have underwritten all these interest rates. And as it's the speed of which these interest rates rise causes the collapse of the banks. And they've probably blown up, just like the whale in J.P. Morgan. It was really the speed of which these derivatives, the 10-year rate rose. That was a year and a half ago. And now it's gone up even faster. So there's smoke, which is probably the reason our friend Obama is having a big meeting tonight with all his boys. In fact, everybody is coming. You got the SEC guy, you got the CFTC officials, you got everybody there. So I have no idea what he's planning. He certainly planned something on April 15th before, and I'm sure you saw that's when the Bank of England loaned the gold. They had this other meeting that was announced. So I have no idea what he's doing, but it seems there's one of desperation. However, the OI, the open interest on the Comex, is down to only 380,000. I mean, that's rock bottom. I mean, I can't figure out who they're going to fleece. I think they're all gone. So
the sheep have been sheared.
They've been sheared to the bone. I mean, I have, unless he just wants to lower and for the sake of lowering the price, but no one's going to. These guys are holding. They're strong. These guys are not going to budge. Okay,
absolutely.
So they're in there for. Okay, and they know what's going on. So I doubt. So I mean, I'm scratching my head as to what they're planning on doing. In fact, I've been scratching my head a lot, on trying to analyze. The longs were caught heavily short in the last 4 or 5 months. They've been massively short, and it seems that the banking industry let them out. Let these longs, they didn't. I thought they're going to get slaughtered. I really did. I thought they were going to get right to the slaughterhouse and get nailed. But they let them out, and they're still playing their games. Yeah, so that's what I'm thinking. I'm hoping that tomorrow is not a bad day. But I put it out to everyone. Zero Hedge, certainly wrote, and they cautioned everyone, be careful. You look for when you have the shares of the equity of gold and silver equities, when they start falling at 3 o'clock badly, then there's going to be a raid the next day. Usually that's one of the signs. And sure enough, they fell off a bit. Of course, the Dow also fell off. But yeah. I just bring it out to warn people that you got to be careful with, you should never play. If you want gold or silver, you can't play with these crooks. The only way to do it is you go out and you go to your friendly bank, your bullion bank, and just buy the metal and put it in the safe. And that's it. Don't worry about leverage. You can't leverage this game. They will destroy anybody trying to lever.
That's guaranteed. Whether it's through an ETF or any other means, they will chew you up because they run the game. It's like if you think you're going to get an good deal and you're going to get a fair shake in online poker, just look at that recent lawsuit, the way that all those people were getting cheated in online poker. Your chances of getting a good deal playing the game with Wall Street are the same as those people who thought they were getting a good deal playing online poker. You know, the same type of thing is going on in the markets as playing online poker. Really that simple.
That is correct. I'm having trouble. I really don't think that the GLD has anywhere close to the goal that they say they do.
Mm-hmm.
That's another, like, I always pegged it down that they don't have any more than 100 tons of metal. Like, once it's down to 800 tons, it'll be all paper.
Yeah, it's gone.
It'll be obligations that's there. In other words, obligation to others or whatever. I don't think there's any more. I think that they did a swap with the Bank of England, mm-hmm. and that gold has disappeared, and they're down. And the gold that left, that was the real stuff, actually went over to China.
Long ago.
Yep. And that's the gold that has been disappearing. The GLD gold that's gone is matching the amount of gold that has been picked up by the Shanghai Gold Exchange.
Yeah, so, that would make sense. They seem to match.
They seem to come pretty close to matching. So the question is it's pretty close. There's a premium over there in China. There's a premium of $40-$50. Okay,
yeah.
Whatever it is now. I think it's 30 today. 30. Mm-hmm. I'm not sure, but anyway, anybody, and there is a mechanism of which you can just go, you arbitrage. You
sure.
make $50, so they take the gold. China doesn't mind. Mm-hmm. They'll have the higher price. They don't mind.
Get rid of some of those dollars. They love it.
And actually, they've been doing that lately. On the TIC reports, lots of paper money has been leaving, which is deadly. Okay,
yeah.
And another reason, really, what you're seeing is the front running of interest rates. People are smart. They know about this tapering game is really not, the tapering that they're announcing is not economic, for economic reasons. It's because they got extra money from their taxes and things like that, and they're afraid that there'll be not enough money left in the shadow banking industry. See, they're absorbing a 0.25% a week, and all of a sudden, if you don't taper, they'll be finished in 2015. So that's the idea behind the supposed tapering, is to kind of slow down, because the grease of any economy is the shadow banking. That's what banks use to lubricate the economy. If you don't have that, you have no economy.
Exactly. Well,
so that's the reason for that part. Okay, but I think that the key events which have happened in the last few weeks are really the 10-year rapid rise in that 10-year rate, interest rate in the United States rate on real, and the consecutive 31 days of negative GOFO. Because it means that it's there. It hasn't been, the gold has not been corrected, and the scarcity is there. The bank's having trouble to lend the gold because there isn't any.
Yeah.
And therefore, the signal is certainly there to China and everything else. They recognize this, and they're basically saying, I'm not going to play the forward game anymore. I'm not going to roll. I'm now going to take possession. So the world is now saying they're starting to take possession of their metal everywhere.
Yeah. So,
and which will create the crisis it'll be. I really think that September 22. I think everyone's playing the game of waiting for September 22. Mm-hmm. That's when the German election, and after that, God help us all, because I think Germany will just let Spain go and Greece
and the rest of them.
And then you have derivative messes. If Greece goes and then you have Spain go, the derivatives that will blow up will be monstrous.
Yeah.
And
you have Portugal and Ireland and the rest of them.
Well, Portugal's in a mess.
Yeah.
But I think that Spain is really bad. Did you hear about this one where they had They built about a 47-story huge building, but they forgot to put an elevator. There's no elevator shaft. That was today.
Elevators are overrated anyway.
Overrated. You know that. How these guys are going to walk up 47 stories?
Hey, it's an obesity epidemic. They got to do something to address it. You know that.
Yeah. Bad loans in Spain went up to 12%, or almost 12% of all total loans.
That's what they admit.
That's true. That is a truism. That is accurate.
Yeah.
But you can imagine the banking system and how much that they're owing, and 100 billion euros is not going to be enough to bail out the Spanish banks.
No, definitely not. So,
and you start adding, and they don't have the money, and Germany's not going to. There's no way.
Yeah, and then you got the Chinese banks too are blowing up all over the place.
They are
so even though China's got all the metal, we're getting ready to go ahead with the global reboot, where somehow it all gets tied to metal, I guess. And do we go with a global currency? Is that the end game here? That's somehow tied to gold? Is that what the end game is here, Harvey?
Something like that. I mean, Reg Howe came out with a great paper. I don't know if you guys have read that one. That's a good one, where he basically thinks that the Chinese will unilaterally raise the price of gold.
Yeah, to 15,000 or something.
Whatever they raise, 15,000, and they have the right to raise it whatever they like. Okay, it can never go down. Once they peg the price, that's it. It can only go up.
Yeah,
and that will force other countries to also, because what they're actually doing is what the United States did in 1933. What the United States did is, a lot of people don't realize when the United States went from $20 to $35, what they actually did was overvalued gold. And probably the real value was maybe 25, 26, 27, whatever. It certainly wasn't 35. But they didn't mind, because gold was starting to come into the U.S. Dramatically. And then it ended up during the wartime, they actually had 90% of the world's gold.
Yeah.
And China realizes this, and they don't mind.
It's like quantitative easing with gold.
Correct. But we'll let them pick up the gold. The question is, we don't know how much gold that China has accumulated. If China announced to the world that they have 8,000 tons, you can imagine that gold would wake up. Let's say they announced it Thursday night. Friday morning, it would be 10,000 bid, no offer.
Yeah, you're right.
Okay, and then that would be it. Okay,
that could well be the case.
If that's if they have accumulated that much, I'm not sure they could. I think they have probably 5.
4 to 5 is the consensus, but nobody knows.
Yeah,
and how much does Russia have?
Well, Russia claims they have 996 tons.
Yeah, but it's probably triple that.
But you don't know what they've done. Putin is a lover of gold. He certainly understands gold. Always did. He always doesn't.
Yeah, but now we're getting to the interplay of gold. I mean, of oil, which, gold is nice. I love it. You love it. But oil really is more important in
Russia,
greasing the wheels.
Yes, and also natural gas.
Yeah.
Russia controls all the natural gas pipelines.
Yep.
And of course, that's why Syria is so important to Russia.
Yeah.
And of course, Russia is now entering into the Egyptian affair.
Yeah, exactly.
Of course, the Suez Canal now becomes a critical part. And and the United States seems to be left out.
Yeah.
Okay, and all of a sudden they have not. And I think Obama's really blown it.
Yeah, by design. Well,
probably by design.
We could get into that next time anyway. So it's harveyorgan.blogspot.com.
Thank you.
We'll be having this. We'll have a link to your site, financialsurvivalnetwork.com. Looks like survival, we're getting closer and closer to that day. I don't know if it's going to be September 23rd, but certainly the signs are ominous, and that 10-year rate really ratcheting up so quickly. And then the meeting tonight, and keep your eyes tuned, because something is definitely happening. Harvey, always a pleasure.
And thank you for having me. It's a pleasure.
Likewise.
Thank you.
This show was brought to you by PrepareWise. They're the leading producer of certified GMO-free, chemical-free organic emergency preparedness food. I buy all my emergency preparedness food there, and you should too. I like the 183 serving mega sample pack. It's an amazing value. It's $280. That's less than $2 per meal. Go to preparewise.com. That's preparewise.com and use the code LUTZ, LUTZ, to get free shipping and much more.
The Financial Survival Network, helping you to survive and thrive in the new economy. Get our complimentary newsletter at financialsurvivalnetwork.com. This is the Financial Survival Network.